2 years ago, I packed my car, old Chevette, 84. Drove it till the engine smoked, hitched a ride through San Antone. Got a job, tending bar, let a senorita break my heart. I wanna sink my feet into some Illinois clay, walk along the cornfield in the cool of the day, get a dog and chase.
All right, welcome everyone. Another edition of the Common Ground podcast here, episode 13. Pretty excited about today's episode. We're going to be talking federal crop insurance, private products, just basically all things crop insurance. So really excited about this episode. Happy Friday to everybody. And as always, hit the like button, share, and join the Common Ground community. So without further ado, I'm going to introduce Trevor Froehling, and he's with CommonGround Insurance Group. And Trevor, thank you for being here today. And maybe start by saying hi to everybody and introducing yourself and a little bit of your background.
Yeah, absolutely. So I'm Trevor Froehling. I'm really glad to be on here. I've been starting my crop insurance meetings here the last couple of weeks. My background was in ag finance. That's what I went to school for. I've worked with my dad was a crop insurance agent since 2007. I started working with him when I was in high school. Worked with him on his production reports, acre reports. So my background in insurance goes all the way back to a freshman in school. I am from Eastern Illinois. I've been selling crop insurance full time for 5 years, and we have a grain operation about 30 minutes north of the University of Illinois. And we raise corn and soybeans. And then in the summer, we raise hay. And I also broker hay during the summer.
Nice. Pretty robust ag background between the financing and being a farmer yourself and being involved on the insurance side for so long. So let's kick things off. Walk through kind of the life of a crop insurance salesman as far as like products, availability, like when's the prime time, what are you selling, and then we can kind of delve in and dig deeper on products as we see fit.
Yeah, so my year starts in September of the prior year. So okay. I in late August, early September with CommonGround, and we go out and we were showing farmers and educating them on margin protection. So that's a crop insurance product based on area county yield and the fall price between August and September for the next year's crop in 2024. So I started in the fall working with them on applications. Those had to be done by September 30th. Once margin protection season's over, I go right into the prior year's production numbers. Right. So as soon as guys get in the field, they fill out, their production reports, they get all done, turn in claims, and then we start the new crop year where we are right now. So as of right now, I am going out every day, meeting with prospects, our current clients in the book of business, and showing them the numbers that are currently still being created, starting yesterday, actually, for the guarantee for the 24 crop year on the federal crop side. And then introducing them to our private products. So I'm showing them our cash rent insurance, our flex lease insurance, how they can protect individual fields on their hail policies, and just showing them the differences and the myriad of different plans that they can use to protect their crop in 24, both on the yield side and the revenue side on price.
Trevor, on those, excuse me, wow. On those fall margin protection, can you walk me through that a little bit? Because I know it's something that I hear you talk about a lot. Just overhearing you, even how valuable that has been for some people. Can you explain a scenario on that? Because it seems like there's still a fair amount of folks, if I'm in the room that you're talking to along those lines, even very, well-established large operators that seem to have very little knowledge on this product. It's just, and it's a federal product, right? There's no private product there.
Yeah, it's a federally subsidized product. It was created in 2017. So Hudson was an agency. So all of our insurance that we write currently goes through Hudson Crop, and that's based out of Kansas City. And I met Jim Bennett, who is my regional manager, and he's one of the first people that introduced margin protection to growers in 2018. And essentially what margin protection is it's a county coverage, but the difference between this county coverage and all the other ones is you can combine it with your individual coverage in the spring, and then you get a premium credit for it in the spring. So if a person said, I want to sign up for this in September for margin protection last year, you get a 95% coverage at the county level, and then you lock in that price as your minimum revenue number for the 24 crop. So that price is set between August 15th and September 15th in 23 of December corn futures in 24 and November bean futures in 24. And that price is set in the fall. Essentially what that is your guarantee moving into the year. And then in the spring, when you go to pick out what your individual cover is, you get a 40% credit on that policy for combining it with your county coverage. So if a guy was going to spend $30 on RP this spring, you would get 40% off of that number just for having both policies active.
So paint a scenario where margin protection in the fall doesn't make sense.
It's totally price based, right? In my opinion, it's
so 23 to 24. If you bought fall margin protection in 23 in September, you're looking pretty smart right now.
Yeah, I mean the last 2 years, it was definitely the way to go. So in 2022, the fall guarantee was $6.11. Now back in 2022, we had a harvest price of $6.60. So the prices were really, really good in 2022. But in the fall, when guys were locking in their price, $6.11 was kind of average for that year. Fast forward a year to 2023, the fall harvest price, all of a sudden $6.11 is $1.25 higher than our harvest price of this last fall, which was $4.88. So a person that bought it for the 2023 crop, we won't know exactly how much that's going to pay them back until the county yields come out later this late spring, early summer. But if you bought that, you got to feel pretty good about it right now, because there's people that collected quite a bit on their RP policies, which is an 85% trigger, and it had 20 cents less on a protection, and they got, a good amount of money back. So if the margin plays the same game and county yields are lower, it could significantly make a difference for that 2023 crop year in revenue. Now, fast forward a year to 24, 23, same scenario. $5.09 in 2023, guys didn't get very excited about. But we sit right now, and today's price open was $4.78 on corn. So we're sitting around 30 cents higher right now for the guarantee on that product from last fall to this spring. Now, the price for this spring isn't set yet. It is set between the average of those contracts, December 24 corn and November 24 beans, in February. So the average of all those end days is going to be what our guarantee is going to be for the 24 crop individually. But what guys are hanging their hat on, the guys that bought margin, is, hey, I locked in $5.09 in the fall at the 95% level of my yield. On soybeans, it's an even bigger gap. It's $1.05 difference right now between the guarantee in the fall and what the spring price is right now. And today's price is $11.84. So if a person bought margin in the fall, it's really impacting what they do on their insurance this spring, because your guarantee is so much higher from the fall than potentially what it'll be this spring.
It seems like you, just from my experience with you anyway, there's been a lot of folks that you've been able to educate very well on this product that so odd to me. It's readily out there. It's a federal product. There's nothing private about it. Why wouldn't every crop insurance agent really go above and beyond and make sure they're selling this fall product for that 30-day window or whatever you got there?
I would say that Hudson is definitely a AIP that is very, on top of this stuff. I mean, they're out as soon as a new product comes out and a product gets created, they're out educating their agents. on margin protection, on our new private products. They are really out, helping the agents become aware of these policies and getting them to the point where they can sell it. I think the biggest problem for any agents that could potentially be selling margin is if you don't understand the policy yourself as an agent, it makes it very difficult to sell it to a farmer.
Sure.
The only reason I'm able to go out and sell it is I've been working with this product for 5 years. I've had 5 different crop seasons, managing what the guarantees are, how the policy works. If you're a newer agent or an agent with an AIP that doesn't educate you on the information on these products, you're not going to know. You're not going to go out and show them a new product that paid 2 to 1 last year because you don't understand how it works. Mm-hmm. And then if it doesn't work out, or if you don't know how to market it correctly, it could really be a negative in someone's operation, though. So they stick to the cookie cutter. I know how these policies work. Let's not deviate from that.
Okay, well, that makes sense.
Speaking of the cookie cutter, so you got your fall margin, you're done with that, you're kind of wrapped up. So you're at the point where we're at today. It's beginning of February. What products, both on the federal side, we'll start with, and then we'll move into the private product side of things through Hudson. But what products are readily available through the federal crop insurance, and what do you see as like the most popular? What are people buying? Maybe just give an overview of that and when those time windows are.
Yeah, I would say by far the most popular type of federal crop insurance is revenue protection. So essentially what revenue protection does is it takes your own personal numbers, your yields times the spring price, and gives you a guarantee for the crop year. Now, there's 2 different ways that you can approach your revenue protection. You can say, hey, I want all of my crops in a county to be insured together, and if my number is 85% or lower, I want to get a payment. The other way to look at it is you can look at each field individually and say, if this farm is 85% lower than what my guarantee is, I need a payment per farm. So you can break it down on a per farm basis or a whole farm. And it's by crop by county on the revenue protection side. The highest level you can buy is 85% at the federally subsidized level. And you can go all the way down to 50% on the coverage of it. Obviously, the higher coverage you buy, the higher your guarantee, because you're taking yield times price in the spring. And those prices are all being set right now. So yesterday was the first day that they're taking an average for this month in setting that spring price. So every day we're working to get a better spring price on our number for 24. And right now, this morning for corn, it's sitting around 478. For soybeans, it's at 1184. So guys hear these numbers and they start to get pretty concerned because they're, like I said, it's around $1 lower than the fall price. But this time last year, our guarantee on corn was $5.91.
Wow.
We're sitting $1.13 lower today than we were a year ago at the same time for guarantee. That equates in the average county to $200 an acre less in guarantee this year than last year. In soybeans, it's even more. This time last year, we had a spring price of $13.76. As we sit this morning, we are at $11.84. That is a difference of $1.92 from 1 year ago today. That equates to around $115 an acre in revenue lost between 2023 and 2024.
That's staggering.
Yeah, go ahead.
No, I was just saying that's staggering.
Yeah.
Well, I mean, things are going to get more and more challenging, obviously. But Trevor, in a market like this, where we're seeing instability, obviously trend appears to be going bearish at this point on commodities, be it corn, soybeans, kind of across the board. What options are out there even to purchase here this spring going right now for the 24 season? What's out there that you can, as an operator, ensure to try to at least hedge as much as possible against these bearish prices?
Yeah, and the key to that is private products. right? And what CommonGround did is they worked with Hudson Crop and created a private product that allows them to get a higher guarantee. And that product is the cash lease insurance protection. So there isn't one person I've sat down and talked to, whether it be in person or on the phone, that didn't say to me that they would be interested in this product. And that is not the norm. I mean, when I go talk to guys about something new, it's usually hesitation, right? They're saying, well, it's, what's the snake oil private product this year? But I get the exact opposite reaction this year when I talk about the clip. All clip is a product you can use throughout your year to ensure a higher guarantee on your crop on a percentage of your lease. And so the simplest way to explain it, go ahead.
So clip is cash lease protection.
Cash lease insurance protection.
Insurance protection. Okay.
So it only applies to your specific ground that has a lease that is fully executed. So you have to have a cash rental lease agreement on that, and it's farm specific. It's not based off of county averages. It's not based off of county. So if you're a grower and you've got, a 100-acre farm that you're paying $300 an acre on, and you feel good about it, but you've got another 100-acre farm 5 miles away that you're paying $450 on, and you see these prices, and now you're nervous. You can buy protection on that specific lease to say, hey, I might be a little upside down here in my rental payment given the commodity prices. And I talked to a guy yesterday from Nebraska that called me, and that was his exact situation. He's like, hey man, I need to know how this clip works because I've got a multi-year lease that I'm in, and with prices where they're at right now, I'm upside down and not going to make any money. I really got myself in a jam. And I'm sure after I talked to him, I'm guessing that's one of the guys that called you to learn more about it, because he's like, this is a product that, basically could save my ass if I execute it properly. But there's some nuances with the clip that, being a private product, there's a longer sales window, there's more opportunity. And it's one of those products that timing is key. So maybe go into the cash lease insurance protection product and the timing of when to buy that, and what you do as an agent to coach other farmers to make sure they get the most bang for their buck.
Yeah, the key to it, that's exactly right, Chris, is timing, right? So 2023 is a great real world example of when the clip was really needed. So I'll use myself as an example because that's usually the easiest for me to explain. So you go fourth week of June of 2023, we were going through probably a month and a week of no rain. I mean, it was drought. We didn't know what we were going to have out there in the field. We went out with the agronomist. Everywhere we went, he said, Trevor, that's crop insurance corn. Crop insurance corn. That corn, if it got a rain tomorrow, could make 140 bushel corn. I mean, it was doom and gloom with the agronomist. And the commodity market reflected that, right? We had a $1.25 spike in late June, early July last year. So the high for December futures on corn went above 6.25 on the board. Mm-hmm. The issue was, I have yet to met a farmer that sold any of their grain at 6.25. And the reason was, you can't sell something that you don't know if you're going to have it. Mm-hmm. And I personally couldn't sell any of my corn because I went and looked at it, and if it didn't rain in a week, I wasn't going to have a crop. So if you went and sold $6.25 corn that day and it didn't rain, the price of corn wasn't going to be 6.25. It was going to be $7, $8 because nobody was going to have the grain. But what clip lets you do is market that price without committing any of your bushels. So I know at $6, if it rains like it does 9 out of 10 years, that price is going to be deflated in the fall because people are going to have that crop. Mm-hmm. If it doesn't rain, my federal crop that we signed up for in the spring is going to cover me. But if it does, my clip is going to let me take advantage of that $6 price.
Got it.
So if a person would have locked in $6 corn in the summer, in June and July for last year, our fall price was $4.88. So a person that would have locked that in would have collected 100% indemnity on whatever liability limit they picked. So
And on that liability limit, let's touch on that, because with the CLIP product, you can choose your liability limit, which directly affects your premium. So if you do have that farm that you're paying $500 rent on, you're paying top buck, it's good flat black, and you're paying that $500. Maybe you want to select a liability of, hey, I'm going to pick $200 an acre. So in that case, last year, when full indemnity would have kicked in, you would have got a check for $200 worth of that rental payment. Exactly. But if you so choose to say, hey, I want to cover $500 of my $500 rental payment, and that full indemnity kicks in, you're getting a check for $500 an acre. Right. And you're still getting a crop off of it that you can go sell at market. And we've run some numbers just, back in the napkin, and there would have been some real happy campers who bought this with full indemnity, spent the money on a little higher premium and got the $500 rental payment paid for them and got to sell their grain. They would have made out like a bandit. Oh, absolutely. And for me, it's totally cost benefit, right? So if I'm working with somebody in the spring and they said, Trevor, this is a product that I could absolutely see myself using this summer to lock in that higher guarantee, it helps me so much to have that spring crop insurance in the spring, because I know exactly on a per farm basis at that point what that person needs in revenue per farm to break even. Right. So if I'm working with them on their federal crop in the spring, on this farm, they may only need another $50 of coverage to cover the gap. Gotcha. But a farm that they had to go out and be competitive and pay the top 10% in a county and a rental rate, well, that number might be $150 on the gap. So when I have the whole picture, it makes it a lot easier for me to build them a holistic plan that would cover all their gaps going into a crop season. So you're going to sign them up in the spring with hopefully you start that relationship in the fall with margin protection. If it makes sense, then you foster that and it moves into revenue protection in the spring. Right. And then the life cycle continues. You know exactly what that guy has. And it's okay, you've got fall margin, you've got revenue protection in the spring, and you're watching the markets daily, and you're calling them saying, hey, I know now is the right time for you to spend $20 an acre, lock in this price. It's June 13th. Let's buy it on these farms, and I can guarantee your profitability. Yeah, almost essentially like a crop insurance doctor writing a prescription to guarantee profits for a crop year is a great way to look at it. I'm going to come in and I'm going to take a per farm basis, and we're going to figure out what do we need for a guarantee to guarantee a profit this year. There's no other business in the world where you can go out and go into a season and guarantee a profit if you buy the right insurance. And I know you're in real estate, Chris, if I could come to you and say, hey, if you bought this insurance, I can guarantee you profits this year, I bet you would look at that pretty hard. Oh, absolutely. Yeah. I mean, trust me, when we're in the car driving and going to shows and whatnot, it's fascinating to me to hear you say, if you're educated and you have the right insurance agent and you're working hand in hand with them, if you do things right, you can guarantee your profitability for the year. That is absolutely crazy to me. That, right. Why are there so many myths or misconceptions? Like, we talk to some people that they're like, oh, federal crop insurance is garbage. I don't do federal crop, because the reality is not everybody buys federal crop insurance. Some people roll the dice, correct? Oh, absolutely. There's definitely people I talk to weekly that are self-insured, and it's because they've had some of them, it's because they've had such a bad experience with crop insurance prior, whether they work with somebody that explained how a policy worked, and if this happens, I'm going to get my money back,
and they didn't because the person that showed it to them didn't explain it properly, didn't work with them throughout the year on their marketing to get a crop sold because of a guarantee. If you don't have a person that's working with you actively on your plan to go out and market the crop when you need to, when the risk is the highest, to get that bang for your buck on the insurance, then it's not worth it because you're not using the tools that essentially the insurance company and the government are giving us to go out and market the grain. But if you look at the inside of these and you really get in the guts of what these policies do to make it so you can go out and sell the crop when the risk is the highest, when no one else knows that they're going to have that crop, you're going to have a major advantage over the person that doesn't. Because if you're self-insured, I can guarantee in the summertime, those guys were not selling $6 corn. Now, if you did have a really good RP policy, right, and you had margin, you could have went out and sold a percentage of that crop and confidently done it because you know that you have the insurance backing you if you don't have a crop.
Well, and I think it's important to realize on that clip that you're not guaranteeing any bushels. You're locking in a price. It's almost replacing a put or having to market your grain and commit bushels and timelines and dates. This is purely a price product saying, I want to commit to this price and this coverage, and I'm willing to pay X dollars per acre. And there's two variables that are going to affect that premium per acre. And that's going to be the time window from when you buy to the fall harvest price. So the closer we get to that fall price, the premium is going to go down because you're shrinking that time window. Right. And then also volatility. So if volatility is through the roof, then the premium might tick up a bit. But if volatility is lower, the premium might be down a little bit. So really, it is all about timing and you keeping your eye on the ball. And it sounds like just like any other industry, not all insurance agents are created equal in the crop insurance world.
Well, and I want to ask Brad. So Brad, every year when you go out and visit with farmers, they have a major concern for a crop year, right? They're every year, my input prices are way too high. What am I going to do? I'm really concerned what the yields are going to be this year. What are you predominantly hearing from the guys you work with for their major concerns this year?
I think most of my conversations with operators have been around, obviously, the declining prices, the uncertainty there in those markets kind of across the board. It sounds like there is going to be some easing up on the inputs. From what I understand, the fertilizer prices, chemical prices are kind of following the trend, which from paying minimal enough attention to the industry here, they tend to kind of always follow each other, right? Which has always been odd to me that two completely different commodities, whether it be potash or whatever, why all of a sudden does it become more readily available or there's more of it when prices go down, or all of a sudden corn prices are going up? We have no potash to sell. Like the prices have to be, it's more expensive. It's like, it seems to me, it always seems kind of like I'm pulling this string over here to pull this string over here, but it's not really necessarily a supply and demand thing. It's a structured situation to where the prices are being set by somebody else, not by necessarily the actual nature of a macroeconomic situation where it is truly supply and demand. It is, one follows suit. Equipment prices, guys are saying, well, we're starting to see equipment prices fall. Well, of course you are, because corn prices are going down, right? And I can't explain it, but all I can speak to is what I see on the surface. It's not necessarily my core business. It's just my kind of my read on things that I can't explain why it's happening, but it seems to be consistent. And so guys seem to be fairly, happy with, okay, yes, these inputs are coming down. I am going to have a little bit of breathing room there, but the concern on these faltering commodity prices is obviously a large topic right now with a lot of folks. If it's, it sounds like for a lot of guys, if we start trying to below that $4.40 corn mark, things get real challenging. Even from a break even between there and the $4 mark, it's going to be really hard for guys to come out on top this year without some of this hedging opportunities that you're discussing on these private insurance products and stuff. It's really the only opportunity to try to fight against this a little bit, right?
Trevor, what do you see when you're out? Like, what is the sentiment of operators that you talk to? Because obviously, in a declining, bearish commodity market like we've been in, they get a little nervous. They're worried about profitability. Is that the time that you see guys pull back on federal crop insurance and private products because they're like, hey, I don't even know if I'm going to make any money. Why am I going to spend, $30, $40, $50 an acre? Or do they get more bullish on it and say, hey, I really need to buy this to ensure a break even or maybe a little bit of profitability? So do you see people really wanting more coverage in this environment? Or are they peeling back saying, I don't know if I can even afford the insurance this year?
Yeah, I mean, there's definitely, you can be overinsured, right? You can have too much insurance. My cost is too much. The key to me is spending it in a way that you can get your best bang for your buck, right? Mm-hmm. I mean, when I meet with a guy, I want to build a plan for them that gives them the best opportunity to, one, market the grain when they need to, so they can sell it at a higher number. And then two, if there's a major issue, they're covered on inputs in their rent, right? So the key this year, because margins are going to be tighter as it looks right now, what is the best tools that we can use to raise that number, right? To get the guarantee higher, to get to a better spot. So every single person I meet with, it's different. We tailor it per person, per farmer, per operation. Even at a county level, you can have a plan for one county very different from another county. So essentially, we set up each individual person's plan separate from the others.
Makes sense.
Yep.
Yeah. That's not necessarily the way that the crop insurance industry has been handled historically, though, is it, Trevor? Is that a fair assumption that it's often your seed dealer, up to whomever your crop insurance agent is, and I'm sure you've probably seen it firsthand where, Trevor, I'm your insurance agent. Are you good with the same? You good with the same stuff we did last year? Well,
yeah.
Does that work for you? Sign here, Trev, and then I'll be out of your way.
Oh, the amount of people I've met with in the last year and a half that see their agent one time a year or talk to them once or twice a year is extremely alarming to me, because it's, that's the major thing every operator has in their pocket that they can use throughout a year to back them and to go out and sell the grain. And if you don't have a relationship with an agent where he's actively working with you on what those numbers are, you're at a major disadvantage every year. And it makes it a lot harder to find profitability when you have a fixed cost like crop insurance, but you're not utilizing it like you need to.
Sure.
Right.
So it's almost, from the sounds of it, these operators really need to almost be aligned as like quasi business partners with their crop insurance agent, kind of be tied to the hip and say, hey, I'm relying on you and your knowledge of these products to guide me throughout the year. And that doesn't traditionally happen. And a lot of it, I think what you're seeing now, before, the insurance game was hyper localized, just like a lot of stuff in ag. But, you're based out of Eastern Illinois. You're licensed in how many states now?
Yeah. So I write from Iowa to Indiana. The I states is where I primarily focus. I quote essentially the states where I can get to the people physically. Crop insurance is one of those, businesses where it's so much easier when I sit down with somebody physically and go through the numbers with them and shake their hand and look them in the eye and work with them. To me, it's almost a very personal relationship with your crop insurance agent. Like you said, there's a lot of trust there, right? Because you're giving an agent information that's very, very important to you, right? I'm giving you my yield information, the inside and guts of my operation, and I'm trusting that you're going to take that and you're going to help me, right? So it's a very close relationship. I mean, the crop insurance farmer relationship is a very interesting one. There's a lot of people that said, I'd leave my wife before I left my crop insurance agent. And
I was going to use the term intimate relationship, but not now.
But it's a very close, very, very important relationship because, like I said, it's a person when things are at their worst, when you have a beautiful crop. I was just talking to a guy on Monday. He said, I had the best looking corn I've ever had a derecho come through and wiped out my entire corn crop. So when you have a whole year bet on this crop, best crop you've ever had, and one day just totally wipes it out, you're counting on that guy that you trusted to protect it is gonna have your back.
Yeah.
Right. I mean, that's a very personal deal.
And what's been interesting from Brad and I's perspective, watching Common Ground and our community and then Common Ground Insurance kind of blossom and grow so rapidly is we're finding a lot of operators, they love working with you for your expertise and your knowledge and that trusted relationship. But also we're finding that these operators don't necessarily like doing business with the guy that lives in their community that also might be farming 1,500 acres as well. Because like you said, he is getting access to that confidential information, the guts of his operation. So we actually, we're surprised to say or hear that, okay, this guy, he lives in Iowa. I'd probably rather do business with Trevor in Eastern Illinois and have him come over and stay in contact with me. And that way I don't, see him at church every Sunday and in the diner and stuff like that. So there are some advantages there.
Oh, absolutely. Like I said, it's all very private, personal information. When I'm working with somebody on a clip policy, you're showing me, well, here's my rent number, right? This is what I need to make money. So when you have information like that, it is very private. It is very personal, and I take it very seriously. And they know that, I am, never going to be competition to them. So it generates another level of trust between me and that grower that, you're in it just for me. You're in it to help me. Right. And that really helps build that relationship as well.
I'll say I'm probably a little partial to you, Trevor, because I really like you a lot, but I would hire you as my insurance agent if I needed one.
Thank you.
Yeah, you're welcome.
What are we missing here? I mean, I'm sure this has been educational for everybody listening. And any other topics you want to touch on?
I want to just be able to get anybody who's listening. I would, Trevor, what's the best way to get directly in contact with you?
By far my cell number. So my cell number is 815-883-1033. I'm a person, I pretty much live with my cell phone on my hip at all times. So if anybody reaches out to me, I'm getting back to them same day. I'd say the biggest thing that I'll put on me when guys say, well, why you, Trevor? Is I won't go to bed on a night where somebody was trying to get a hold of me. Before that day is over, you're going to hear from me, and we're going to start working on whatever the issue is. That's universal. That's the one thing that people really, really like about working with me that's different than other guys is if you call me on a Friday, you're not hearing from me on Monday. You're hearing from me Friday night. Yep. You're hearing from me as soon as I can get a call to you. You're getting a call or a text or an email. Hey, let's start working on this, and I'm going to start finding solutions. The best example of that for me was I met with a guy on a Monday, same week. We went through his policy. He said, Trevor, I want to cut back on some premium this year. I'm not going to buy hail insurance this year. I'm going to just get my multi-peril. Okay, well, you can set it up any way you want. So he didn't buy hail. Well, that weekend on Saturday night, huge storm coming through. Just watched the 10 o'clock weather, and there's a hailstorm coming. I got a call at 10:30 at night. He wants to add hail to his policy. Trevor, we screwed up. I need that hail. There's a storm coming tonight. We got that hail added on Saturday night at 11 o'clock. Now, he didn't get the hailstorm. His crop didn't get destroyed. But if he did, he'd have been covered, and he knew he could get a hold of me. That's the type of guy I like to look at. My wife doesn't always like it, but that's yeah.
All part of it. So, go ahead, Brad.
Just visiting CommonGround.io, there's the insurance tab up there with a quick contact form as well that folks can fill out, and it will be directed straight to you for you to reach out.
And Trevor, maybe touch on some of the time windows, because timing is of the essence on a lot of this stuff. So your spring product, like what kind of deadlines are you looking at for what products? And, you basically want to get the ball rolling as soon as possible, being, February 2nd here.
Yeah. So we're setting prices right now, and it's a good idea to look at your operation. The earlier, the better. The earlier I get it, the easier it is for us to get a plan for the year. Our hard deadline on the spring crop insurance is March 15th. So by March 15th, you have to have your application signed, dated, and ready to go. You can't make any changes after that date. On private products, it's April 1st. So if you wanted to, lock in a hail policy, April 1st is a start date. They usually extend it. So hopefully we get till May, June on a hail policy. But essentially right now, my focus is on the federal crop side because we have a hard deadline on March 15th.
Yep. And that product, the cash lease insurance protection, that is slated right now. You can buy that all the way till August 1st.
Correct.
Yep.
One other thing I'm going to thank you for, Trevor, is your lack of acronym use for being such an insurance guy.
There's a lot of acronyms.
It's hard for a lot of folks to follow, but I appreciate you just speaking in terms that everybody can seem to understand a whole lot clearer than.
And I have no doubt that there's things that we talked about today that I covered very quickly that I have. I talk about it every single day. So I know the ins and outs and all of it, but somebody listening, you're going to be wondering, well, how the heck does that work? I need to listen to that again. Do not hesitate to reach out to me. I would love to discuss with anybody that wants to talk with me exactly how all these products work, all the timing, all the price differences. On my computer right now, if you're in a county, I can quote your county within 30 seconds and give you the guarantees for what your numbers are. The biggest thing for me is anybody that's renting ground through CommonGround. When you go into a new farm, you don't get to use your own information. So when you go into that farm, you may not know right away what your guarantee is because you're thinking, well, what's my guarantee on this farm? So the government assigns a T-yield, which is essentially when you start with a new farm, they're saying this is what we're going to let you use as your baseline for your yield number. So if anybody rents ground through CommonGround, is curious what those numbers are, get in touch with me. I can look up the T-yield within a couple minutes, and we can go through exactly what your guarantees are going to be for the year.
And it's not even just renting ground through CommonGround. It's any operator that's picked up a new lease that it needs to establish that baseline and figure out what that T-yield is. They can reach out to you for whatever lease they picked up. So I would encourage them to do that as well.
Yes.
How is this T-yield figured?
Yeah, so it's a totally government-based number. For example, so I farm in Vermilion County, and this will be my first year farming in Vermilion County. So I get an assigned yield from the government based on what my guarantee is. Every 3 years, they update what the T-yield is. So if you get a new lease in the county, you're kind of rolling the dice a little bit because if you're right at that, when you start farming that farm, if you get the fourth year and it's a new year, your guarantee might be $50 higher than a person the year before. Every 3 years they establish it. It's typically 15 to 20% lower than what the county average is. So for like me in Vermilion County, if I bought margin protection, my guarantee, my expected county yield is 212 bushel. My T yield is only 189 bushel. So the county products are extremely significant to younger farmers and guys that are picking up new ground, because you're going into a farm and your guarantee is going to be significantly less because you don't get to use any of your own yields. So like in Vermilion County, for example, if I bought RP in the spring and didn't have margin, my guarantee would be 40 bushel less per acre than if I didn't have the county policy. That's the equivalent of essentially $200 in guarantee difference because of the type of insurance I bought.
Yeah. Well, I mean, I've spent a lot of time with you, and I'm sure we could continue this, for 5 or 6 hours. But I think we hit most of the highlights we wanted to touch on. And Brad, do you have any other thoughts or things?
No, I just always really commend Trevor for his knowledge and kind of fact-based data that he operates off of. It's not his opinion. It's he does his research. He really digs into this, and so I commend him for that. I think he does a hell of a good job. And
well, he's always said, "I won't sell anything I wouldn't buy myself."
Yeah.
So with the ag finance background, him being a operator himself, and the vast knowledge in the insurance and the products available, it speaks volumes for the knowledge there. So
well, and I think the biggest key for us is anybody that's working with CommonGround Insurance Group is an independent agent. So when you're working with us that we have your best interest in mind. If you're working with I'll pick on country companies. If you're working with a country company's agent, those guys are working for country companies. Who are they really working for, right? When you turn in a claim, are they looking out for the farmer or are they looking out for country companies, right? Yeah. My duty, it comes to the farmer first, always. So when you pick an agent, really think about, well, are they working for me or are they working for this insurance company?
Sure.
Right. I mean,
that's a great point.
Yes.
Awesome. Well, Trevor, fun as always. Greatly appreciate the insight. Again, as Brad said, you can go to commonground.io, check out farms for lease, hunting leases, properties for sale. Click on the insurance tab. You can get right to Trevor through any form submission. He probably hit rewind a couple times and get his cell number. But thanks, everybody, for joining. Another episode in the books. Again, join the Common Ground community, and we'll catch you next time.
Hey, thanks, guys.
Thank you.